James Stevenson, Elon Musk's top retail analyst, has stated that he expects Tesla's Q for revenue to reach an all-time high of over $25 billion, which is already more than the company's profit in 2019. This is one of the execution rumors that some Tesla financial backers are keeping their ears to the ground for the 2025 vehicle organization. He mentioned that although the bears could anticipate that Tesla's recent value reductions will destroy its prospects for profit growth in 2025, he projects quarterly record deliveries and profit for the company in that year. Welcome back to Tesla Facts, everyone. The Tesla examination shared a sketch of Tesla's average revenue, including his 2020 to Q4 forecast. In a recent tweet, he believes that once the new processing facility in Lathrop ramps up in 2023 and POTUS's incentives take effect, Tesla's energy should experience a big increase in revenue from its super PAC. At the moment, Tesla is expanding its Uber industrial plant. Each of the company's super PAC batteries is essential to the Range Rover's future use of renewable energy, and Tesla has been successful in increasing manufacturing in its 2022 Q3 update letter. The carmaker stated that its energy storage arrangements will increase to 0.1 gigawatt-hours in Q3, a year-over-year increase. Given the chip shortage, Tesla said in the update letter that this outcome was particularly positive. According to Tesla, the company is now expanding production because the demand for its chips and related products continues to exceed its supply capacity to meet the increasing demand. It has committed to a 40 gigawatt-hour super PAC production line in Lathrop, California. What relevance does this have for Tesla? It's large, all right. Remember to hit the like button and subscribe if you enjoy this type of content, so you can be informed about all things Tesla. In his tweet, James Stevenson said that Tesla produces the Model 3 and Model Y, the two best-selling premium cars worldwide. Sales of the Model 3 are still increasing, he said, but not as much as those of the Model Y, which is increasing production at Tesla's newest plants in Austin and Berlin to reach 3,000 vehicles per week. Although Tesla cars are selling well in other countries, the automaker is no longer the best-selling EV manufacturer in the US. Rather, in 2022, it overtook all other luxury car brands as the top seller in the country. Tesla sold 491,000 cars in 2022, up 44% from the previous year. According to the Car News Analysis and Server Farm, this is especially intriguing because in a year when premium car sales in the US were declining, Tesla outperformed the luxury market. Without a doubt, Tesla automobiles are gradually taking over sizable EV marketplaces, which is anticipated to boost revenue in the next years. In his tweet, James Stevenson stated that Tesla's profit per delivery is exceptional for any automaker, let alone one that produces electric vehicles. He stated that although income is anticipated to increase as a result of more deliveries, Tesla's recent price cuts may impede the development of profit per delivery in 2023. The Tesla analysis also stated that he believes that consumers' decision to buy FSD at greater prices as features advance will be a major factor in future years' profit growth. Although there is still more to be done to get the technology ready for widespread usage, Tesla is making good progress with its FSD software. The company unveiled a number of significant stats regarding the program, which is still under beta testing. At the recent Tesla AI Day, the software is anticipated to hit the market shortly. However, Tesla has not yet provided a timeline for when it will be completely finished. The manufacturer reports that there were 160,000 FSD beta testers in 2022, up from 2,000 in 2021. Navigation still has a lot of problems, especially when it comes to safety. Musk disclosed in late news that the FSD system will soon be made available to consumers, and the software will now cost $15,000. He also revealed plans for a global launch, subject to regulatory clearance, for Tesla. That FSD is just another treasure trove with enormous potential to grow profitability and raise revenue. According to James Stevenson, financial supporters are primarily interested in income growth, and sincere investors are inclined to place their money on a business that exhibits strong profit margins and a solid track record of revenue. Tesla most likely has a big market advantage in this area. Martin Vicha, the investor relations manager for Tesla, disclosed at a Goldman Sachs tech event in San Francisco that the automaker has already started to make manufacturing enhancements that are essential to bringing EV production to mass markets. The assembly process has been significantly improved, enabling Tesla to reduce the production cost per vehicle from over $84,000 in 2017 to just about $36,000 in recent quarters. Almost none of these cost savings are due to lower battery prices. Rather, the EV manufacturer has streamlined manufacturing and shortened the time required to create vehicles by implementing innovative plant designs and production procedures. Additionally, Tesla has started making changes to its EVs by removing parts that are unnecessary. The carmaker has declared its intention to replace all ultrasonic sensors in its upcoming models with Tesla Vision technology. The company can save money if it is successful, because sensors account for a large amount of their production expenditure. Production of Teslas for 1,680 battery cells is increasing by boosting the manufacture of the car's battery cell and attempting to lessen dependency on this new cell. The vehicle organization is making headway, according to a recent update. This is a component of Tesla's endeavor to create car bodies using a small number of enormous cast pieces and enormous casting equipment. The car group stated in 2021 that it was collaborating with roughly 6 automakers that were using a comparable approach. Is it likely that Tesla will earn at least $10.0 per vehicle in light of all these fundamentals? Yes, it is, and it may rise even further. Similarly, Tesla's humanoid robot, Optimus, exhibits a lot of promise. Not all investors were pleased with the Optimus model when it was released in 2022. Musk acknowledges that there is still much to be done, but that many people are unaware of the possibilities. He claims that Tesla plans to manufacture millions of these robots at a cost of less than $20,000. He said that in 5 to 10 years, he thinks the Tesla bot will be a fantastic advancement. Tesla may be able to increase the importance of FSD software and generate a large income boost to finance share buybacks in the coming years if it can scale up manufacture of the Optimus. Even then, there are still questions about whether now is the ideal time to repurchase shares, despite the fact that many Tesla investors are optimistic about the idea. According to some investors, Tesla should have sufficient cash on hand to lessen the impact of any future unforeseen circumstances. If it decides to repurchase shares, insufficient funds could force the company to sell shares or take out a loan, both of which would lower its value. Indeed, some of Tesla's investors recommend that the firm concentrate more on constructing lengthy on lines, increasing manufacturing, and growing its 4,680 cells rather than a typical repurchase. According to Stevenson's prediction, Tesla will increase its profitability over the coming years by making FSD so alluring that more customers are willing to pay a premium for it. Apart from the advancements in FSD and Optimus, the robotaxi and semi-trucks have the potential to generate substantial profits for Tesla. The robotaxi concept is still in development, but the automaker has started producing its semi-trucks. Leo Kogwin, the third largest financial backer of Tesla, mentioned a robotaxi profit model in a recent tweet. He said that by selling the car to private owners for about $100.0 with FSD and charging $20 to $40 every ride, Tesla could make its own tiny robotaxi with a profit of about $200,000. Kogwin thinks investors will gain a lot if they can accomplish this. Kogwin asserts that he is extremely optimistic about Tesla's future and predicts that the company's market capitalization will surpass that of both Apple and Saudi Aramco put together. Musk said the same thing following the release of Tesla's Q3 2020 financial results. Musk stated on a recent earnings call that he thinks Tesla can overtake Apple. In terms of market capitalization, he believes that in the future, Tesla will be worth more than the tech business, around twice as much as Saudi Aramco, even if he is aware that this will not be simple or occur anytime soon. Even while investors can still have faith in Tesla's future earnings, it's crucial to assess the company's performance and the cost of funding the automaker. How do you feel about James Stevenson's Tesla prediction? Tell us in the comments section below. Then tap the next video on your screen to learn more about what Tesla has been up to in the past several days. I'll see you there.